top announcements are just housekeeping. Subscribe on YouTube. We're publishing these on YouTube pretty much a day after, and it feels like you're a part of the fun when you're watching the video. Follow us on Twitter, posting there now, posting some little notes in between shows, some clips, and then definitely leave a review on Apple Podcasts. We've been loving the funny ass reviews and the feedback.
Do we have any new one for today?
Yes. Oh man, what was it?
We have to read them. Yes.
What was the one you shared?
Some really good ones
the other day.
I'll pull it up. I'll actually pull it up and maybe we can. There was two really good ones actually. Maybe we read them both.
Well, we only have 2 reviews. You can't burn them.
No, we got like 7 or 5, which is why we need more of your reviews, and we'll read them on the show. So actually what I can do is I can, we have 8. We can open it
Alfalfa is the yin to my yang, the coffee to my cigarette, the save to my right click.
Let's see if I can pull up.
The coffee to my cigarette. I love that as I smoke this thing.
Keep going. Isn't there more? No, that was it.
Yeah. I have a hard time grasping crypto and NFTs, even though I've started dabbling a little bit into it all. These 4 dudes found a way to break it down in a fun, intelligent, and elementary way. Crypto Kebab has it. Well, this is a long review. Crypto Kebab has become a great podcast interviewer. He references you as the Persian Tim Ferriss. Oh, man.
Oh, I love it.
Yeah. Crypto CFA has a well-balanced perspective, translating this I feel like this person might know us, translating this brave new world of finance for the traditional-minded folks like myself. The DeFi Lord knows crypto better than most people I've listened to, and how to relate to the global economy and politics. I said Talapino is a walking encyclopedia on anything global finance and business. I feel his distaste for dogmatic behaviors in today's ever-growing dogmatic landscape, and I feel wiser after listening. So anyway, that's a pretty epic, epic review.
So good.
Good one.
So yeah, to do that.
My man.
Robin Gerlach, shout out.
Yeah, big shout out.
So to do that, you just head to Apple Podcast search, and when the show comes up, there's like a little review section. I was trying to show it on screen, but I can't multitask. And then on Spotify, I don't think you can leave a review yet, but you can like rate us. So you can leave 5 stars. Bonus points for that. But we'll keep reading these out on the show every week. That was a really funny one. Any other housekeeping?
I think that's it for now.
All right, so what's on your mind, boys? Are you guys wanting to dive into LooksRare?
Well, I have the quote on Dex Guru up at all times just so I can buy this dip.
Yeah, I have Uniswap loaded with the purchase, just waiting, and still waiting.
You're gonna
oh my god,
a chance around 6 p.m. tomorrow again, I think.
It just jumped like 30% in the last 20 minutes.
Okay, nobody has any
idea.
Bro,
I was going to buy it yesterday at $2, and you know what I did? I sat there. I spent 2 hours trying to make a video for fucking Jonathan, and then like when I finished the video, it was $3, and I was like, I was recording the video, and I pulled it up, and I was like, and I was gonna buy this, and now it's up 38. Oh shit!
So let's see. This is
LooksRare.
For people who are watching the YouTube videos. Armand's got a little screencast up, but essentially they create a decentralized marketplace, airdrop to any OpenSea user who had traded at least 3 ETH on OpenSea, and they have a unique model in the sense that 100% of the transaction fees go to the users, to the token holders, and it goes to token holders by the method of staking. There are also some additional rewards to stakers. They're giving some incentives for staking, and then I believe there's if you actually trade on there, whether you purchase or sell, there are also some rewards you can claim based upon the volume that you trade, and then of course just simple liquidity mining. You can provide liquidity on Uniswap. ETH and Looks is the pair. Let's see what else. I think the fees are lower than this on OpenSea. Instead of being 2.5%, they're 2%. They also have some interesting market making.
Want to give you the whole spiel?
Yeah, you want to go through the tokenomics? Let's do it.
Just run it down.
Yeah.
Yeah, I feel like I looked
pull it
into
up.
this a lot yesterday.
Let's pull up
The general gist of the bullet point features, right? So the main bullet point feature, 100% of fees are shared with the community, which is pretty wild. And the fees are 2% instead of 2.5%. So it
Can
might
we?
not seem like a
Sorry,
lot, but when you're
before we
selling
get
like
deeper,
300K JPEGs, it's it's quite a bit.
before you get deeper in the features, can you talk about why it even matters that we're talking about this? Like, I think setting the context, like against how well OpenSea's done, its valuation and stuff, and why we're actually interested in looking further at this, I think matters.
Yeah.
I actually, if I'm being totally honest with you guys, I missed when we hit the record button and started the podcast. So.
Oh yeah, we're in it, baby. Oh yeah,
I was
that's the best
just
part.
trying to fix my camera here, and then suddenly I realized we're we're live.
I will never warn you guys, just so you know.
That's fine. Yeah, I mean, quick backstory on this. OpenSea, for anybody who's vaguely familiar with NFTs, knows OpenSea by far and away largest marketplace for NFTs on the planet. Do enormous volume, just the absolute gigantic lion's share of volume. But the community has had like a bit of an anxious relationship with OpenSea because OpenSea is, they got the kind of private VC backed thing going on. There's no token. All the fees go to OpenSea. But beyond that, there's just been sort of like a general feeling that OpenSea is not really into the community. It kind of feels like they don't care sometimes. Mm-hmm. And the rate of development seems really lackluster. Like we've had the same OpenSea basically for forever at this point. And it leaves a lot to be desired. The API is terrible for anybody who uses that. It goes down constantly. It's
the
always
whole site
bugs,
goes
always
down
crashing
all the time for everybody. Nothing indexes in real time.
There's just basic features that should be there that don't exist, right? So there's been like a general sentiment for a while that, man, if somebody just launched a decentralized OpenSea competitor, which does seem like the most obvious play in the world, at least at a high level, it would be successful, especially if they did a sushi swap type vampire attack with a token and a good tokenomics model. And I think it probably took a while for us to get here because it's a lot harder, I think, to build one of these marketplaces than it is to just rip off Uniswap. And developing is hard as it turns out. But here we are. We launched yesterday. Was yesterday the first day?
Crypto time. It feels like 5 days.
Yeah, and today was nuts. I mean, the volume was much larger than OpenSea today by a lot.
What?
Although we should.
No way.
Yeah, yes, here. but. So LooksRare did way more volume than OpenSea today. Way more. But they did it with 1/50th the number of active traders, which tells you something fishy might be going on.
People are washing trades this thing or something.
People are wash trading, yeah. So if you look at just the general feed, you're going to see people are not even trying to hide it, right? There are floor meebits that the same two wallets are selling back and forth to each other for like 200 ETH over and over again. Last I checked, like a couple hours ago, there was like 90,000 ETH in trading volume, and we're probably beyond that right now. And
just
the reason that's happening is
go ahead, Nick.
There's a reward structure with the token, so they're giving out incentives for people who buy and sell NFTs, and somebody did the math on this and basically realized that I did a calculation on it this morning actually to get an exact number, and I think this morning when I pulled it up, if the token price was just I think 280 or higher, as long as we stayed below 90,000 ETH in trading volume, it was massively plus EV to just wash trade with yourself.
Look at this.
It looked like you could basically make like 10% rake back in a way on all of your all of your fees. So if you traded like $20 million in a day or something, which is not as outrageous as it sounds, if you're just wash trading 200 ETH back and forth with yourself, you could make like, $2 million in token rewards. But I was watching this all day because I was thinking about doing it, but I had a sneaking suspicion that by the end of the day, everybody would really be catching on to this, and the incentive structure is such that it calculates your rewards like as of like the last, like, it's not the last 24 hours, it's like a set 24-hour block, right? So if there's like 30 minutes of trading left and you realize that we're way below the threshold where wash trading is profitable, like in the last 5 minutes you could just slam like $1 million of like wash trades back and forth and basically like guarantee that you're gonna lock in like a pretty juicy profit there. The risk if you do this is that everybody does it and then you end up paying more in fees and in gas than the token rewards that you get, because we end up basically it divides the number of tokens by the total volume, right? So if the total volume is like 100 million and you're 1% of the volume, then you get 1% of the tokens, is how it works. And there's big rewards for the next 30 days. So these shenanigans are going to keep happening.
Yeah.
And then I believe it halves the next month and halves the month after that. So,
but I think the driving
it was pretty,
point is
pretty nutty
let's kind of take this in stages, guys. Like, cause I'm even lost on where, like, we're way in the weeds, right? So this is an NFT platform that is pulling off a vampire attack, something akin to like what SushiSwap did to Uniswap last year, against the number one NFT platform that has like the entire market share, which is OpenSea, that everyone already has like a bit of a sour relationship with. I think everyone's been waiting for that killer, we could almost say. And there's definitely not like a positive sentiment in crypto Twitter or Discord about OpenSea, particularly after the fact that they decided that they aren't going to do a token and they're going to go public. And so I think we've all been waiting for like, all right, who's going to do this? And OpenDAO came out and it was like, no project here, no nothing, just a token. And then here comes LooksRare in the beginning of the year, drops a token that's worth already double what the OpenDAO one was worth at least. And they have a working, functional platform. One of the really cool things about it too that I thought was just simple and clever is in order to claim your airdrop, you have to list the NFT. So day one, they already created like enough of a marketplace to get going. So I guess kind of to take it in stages, what is your guys' perspective just really on first just like the platform itself, and how important do you guys think that is? Like I've told you guys separately offline, like my gripes with like the functionality and the UI of the platform. Like how important is that? What do you guys think?
I think it was important that they released a new feature or something that was unique to their platform that didn't exist on OpenSea, just so you could see that people were not just getting up something that's, can list and purchase, but that people were listening to the community. The team was listening to the community. But I think they may be facing what OpenSea faced early on, is that they probably had a backlog, of new features they wanted to add. And then they start getting traffic and they realize that they're going to have to build up, infrastructure, stuff that you don't really want to work on as a product manager, but you're going to have to spend a lot of your devs' time building up for infrastructure to handle the load that these sites have to handle. And so, I was looking at the team structure is built to ship product. I mean, they got front-end engineers, back-end engineers, Solidity developers, designers. So they should be ready to rock, but we'll see if they get overloaded by, the performance issues and when you have a product that doesn't have as much scale, your edge cases are really just a few people having bugs. For example, people with Trezors not being able to sign a transaction. But when all of a sudden when you have millions of users coming to your product, your edge cases are 10,000 people, and they start to make noise and start to cause issues. So we'll see if they can get through, constantly building up the infrastructure to handle this performance, and if they can start shipping new features. And if they can do that, if they can show that they're innovating faster than OpenSea, they got a good chance to build a story. And to what Steven was mentioning earlier, whether it's wash trading or not, the fact that they're able to show charts and show traction where there's trading volume is pretty impressive to start. And I think will maybe, kind of create some self-fulfilling prophecy. People see trading volume, then they trade more volume. They feel more comfortable with it. So I don't know. That was my initial impression on it. Pretty impressive. They had new features, but this is that zone where now they're getting hammered with traffic, and see if they can kind of keep up with the pace.
Yeah, I'm really glad you brought up the team, because that was on my big list of
I didn't even know this page was up. There. Yeah.
So, nobody on the team is doxed, right? It's a whole all in on team, I think. Yeah.
Yeah.
Which has its
up on the screen right
drawbacks and its benefits. I think, like you said, Nick, like the biggest risk here is just that I think a lot of people in crypto really undervalue the importance of shipping, and like how difficult it actually is to ship stuff, especially when you're talking about apps that are orders of magnitude more complicated than some of the DeFi protocols that exist out there that are really basic, have very minimal features, and are just sort of focused around like not losing users money, which is great, but it leaves a lot to be desired. But you were saying you looked into it a little bit, and you think the structure of the team in terms of just how it's organized is clearly designed, in a way that makes sense, and by somebody who's built something like this before.
Yeah, I mean, you look at the team structure. It's not like three co-founders and like I'm the tech guy, I'm the marketing guy, and I'm the finance guy. You have a back-end engineer, 2 front-end engineers, 2 Solidity engineers, a tech lead, a product manager, and a designer. And that's like, if you're going to kind of build a skunkworks team inside of a big company, that's kind of the team you'd put together. Skunkworks team is a team inside of a company. It's kind of like a special forces team. They have unlimited budget. They work on special projects. They can kind of start and stop projects as they see fit. But, when I've been inside of companies and we had Skunkworks team, this is the kind of setup that you would put together, that kind of team that can kind of get anything done. So whether these are actually real people or not, whether those are, it's interesting. They put their GitHub repo so you can see the commits they've made. Specifically for the tech lead and engineers. Yeah, some of them may not have like actual commits to code, but in any case, again, we don't know who these people are or if they're actually real, but the team structure seems to make sense, and hopefully these back engineers know how to manage server volumes, because oh boy, they're probably getting a crash course if they don't right now. But
my God,
do you guys have any idea how big OpenSea's team is in comparison?
I think they have 100 people, if I'm not mistaken.
Nice.
I think.
Yeah, I would
could have just pulled that number out of my ass, but that was the number that came to me in my brain.
I just went to go look on LinkedIn and realize I never use LinkedIn, and there's messages here.
It would be very impressive of LooksRare to be able to, and it would say a lot if they were able to innovate and iterate and react to like user feedback quickly enough, because I think that the number one thing that's most interesting for me about this project is how user focused it is. And I think people were craving that and want that. And especially the possibility of a decentralized OpenSea is like really exciting to people, not just governance, but participation, the rewards. I mean, there's so many cool features about it, right? Like my favorite is like the collection offer. Like how sick is that to be able to just go in and make one offer to the entire collection, or the no fee private trading, another use case that's like huge between people. So some really cool features that it's probably only the beginning of.
And notice
how strange is it though?
Particularly good at creating markets. That's a market making feature, because they want the ability for the bid on the order book side to fill up with orders. It may be lower than you think, but at least it starts the formation of a market, which is tough in these kind of situations to build initially.
Eric,
I thought it was really strange that on the one hand they've built these really good and cool features, right? The collection bid is like a super useful feature, but then they didn't build in the ability to sort NFTs by lowest price.
Yeah.
Which basically makes it completely unusable for the user, right? Like I was going in there trying to buy something and I'm like, wait a minute, I can't sort this. So That was a very strange, like, juxtaposition to me.
I just
to be
hate
like,
the
okay,
navigation. I hate it. I hate everything about like what I
do you hate it, or are you just so used to OpenSea that your brain kind of hates it, but maybe it's not that bad?
So I thought about this a lot, Stephen. I think that's a very fair question. I think it's both, but I think that there's a fundamental part of me as a technology user that is always open to a new UI that is better, faster, or more intuitive, and that is not the case here. There's so many times that I've come across like a competitor who simply levels it up and does a better job, and then I go and I rave to people about it. I tell people about it. I'm like, this is a better experience. You know it when you feel it the first time you're there. My brain looks at this website and it can't process where to even begin. So I think that there's that's the biggest weakness for me by far. And I would hope, because I want somebody to win, actually, what I ultimately think is the biggest win here too as a user is like the competitiveness to finally arrive like in this space of like NFT exchanges and like marketplaces. It's been all OpenSea. So like that's just going to make OpenSea better. It's going to make Coinbase better. It's going to make them all so much better. I think Coinbase will end up doing the best job, but hey, this is what we have right now. We'll see.
Eric, can you test your mic? Because I can't hear you.
Yeah,
still.
Where is Eric's voice?
It's a good. You guys all made good points. I think it's important, really, to remember that this is day two. This is day two of the platform, and I don't know if you guys followed this Twitter user Daniel100.eth. He sold his CryptoPunk to and put 67 ETH into Looks token.
Yeah.
And, he was like, he's putting out his bull thesis. I think the bull thesis is pretty clear, but he was dealing with like feedback, like FUD feedback. And somebody goes, you literally bought at 10 or 20 times the price of influencers. The market can't be sorted by price, like Steven said. Buy transactions used 40% more gas than OpenSea, and you can't enter 0.1 into a field. You have to type 0.1. And Daniel100.eth goes, dude, it's literally day one. All this can be fixed. There's like always going to be people who invested before you. Like imagine hating on a marketplace that actually represents Web3 and gave you free money. And all you have to do is type a 0. Like this is ridiculous.
That's a fair counter.
Yeah. And Eric, can we pull the CFA part and just start talking about how we would go about value, now that we've went over how the project looks in general, it would be nice to get your mind on how to approach valuing this, because the token could be $3, $100, but really start market cap comparisons.
I think we had a good back and forth in our group text. I think the simple way to look at it is compared to OpenSea. OpenSea has 14 billion in revenue last year. So when you're talking about a vampire attack, that's like a pretty good market to attack. And when you're looking at the market cap of LooksDAO, at least yesterday when it launched, when we were looking at it, it was like 50 million or something. I think it's much higher now. What is it? 300 million?
300 circulating, $300 million market cap circulating in something like 3 billion fully diluted.
Yeah. And I've kind of like thought about that market cap versus fully diluted valuation and which one seems to be more applicable here. I think it's important that the tokenomics make it so that the circulating supply is going to be pretty low for a while. It didn't give the founders a bunch of tokens right off the bat that they can just dump. Mm-hmm. They're locked up for 180 days, so it's going to be tokens trickling out to actual users, making the platform more valuable inherently as more people use the platform. So I'm actually pretty bullish on. I mean, obviously we're all pretty bullish, but I think like it's a reason to use market cap instead of fully diluted value. And you could even argue that at 3 billion fully diluted, it could still be undervalued if you consider that NFTs are still a growing marketplace, and like maybe OpenSea is even undervalued.
Right.
I mean, OpenSea is definitely undervalued, right? For sure. Because you said with 13 bill last year, but they're going to do like 4 or 5 billion this month alone, probably, right?
Wow.
If not more. So
yeah, they grew. They
got to be like a $60 billion company now.
The Series C, which they announced the close of, was a $13.3 billion valuation. But we were talking on the group thread that if they went public, a $30 billion valuation is definitely not out of the,
I mean, yeah, it
out of
seems
the
like a
ask.
drop in the bucket now.
Right.
A company that grows revenue at 600x year over year doesn't get valued at one-time sales. Like one-time sales, I threw it in the chat. That's like an old, mature, like cereal business. That's like, that's not how these things get valued in the tech world.
Not
So
at
if
all.
you have an overall tide that's growing, like
Mm-hmm.
100x, 50x, plus, looks as a company, if it can keep up the volume. I mean, the first day at launch, even when people weren't figuring out the wash trades, there were some hours where it was up to like 75% of the trading volume of OpenSea. So we'll see how this thing progresses. But certainly, I think the
Mm-hmm.
conclusion we came to in the thread was that there's a lot of things that could go wrong with this project, from the team to the product to just the overall market could be an issue. But when you look at it, a risk reward, you could lose all of it, but it also could be a 10x plus. I don't know where we decided on the potential upside, but just looking at if it got up to the OpenSea valuation, which these kind of, OpenSea's valuation is currently made of a market of institutional investors. And right now, this market is made up of retail investors and institutional investors. And like we know, some of these tokens can pull a full meme, rocket moon, move. And this could be one of those that could certainly shoot past like a reasonable valuation. So it seems like the risk reward is potentially here. And it makes sense to invest when things aren't worked out. There are risks and concerns.
Yeah, big
Steven,
time.
what do you think about the tokenomics in general? Like the way that they were structured, the way that things phase in. Did it look sensible? And no traps in there.
I think generally speaking, everything is, for the most part, really, really good. Tokenomics are always a tricky thing, right? And also, nobody's really figured them out yet anywhere. It's like sort of this like moving target that we keep iterating on. When you have a platform like this, right, you have this chicken and egg effect where you need people to buy stuff, but nobody can buy anything if nobody lists. And you need people to list stuff, but nobody wants to list anything if there are no users to buy. So how do you solve that problem? And it turns out that a token was a great way to solve that problem. And even though, yes, if you look at all the volume right now, it is, I would guess the volume right now is probably 98% wash trading.
Right.
if I were to be honest. But that's not necessarily terrible, because like there is some form of liquidity there. There are users there. The fact that everybody is talking about it nonstop on Twitter right now is like free marketing. It's free eyeballs, right? And you have to start somewhere. And yeah, I think a lot of these people will just get the token and dump it. But the way that the platform operates, there's a very direct path to valuing the token, right? The token holders get 100% of the trading fees.
Mm-hmm.
So you can kind of just put like a simple PE on something like this, right? One of the interesting things about the rewards here, right? So sometimes these platforms are tricky to value because they pay out rewards, but the rewards are paid in their own token. So it's like, how do you even value that, right? It doesn't even make sense. But half of the rewards right now are being paid out in ETH, and in the long run, I think the vast majority of the rewards
Good point.
will be literally paid out in ETH, because you're literally getting a portion of the trading fees. The trades are happening in ETH, and the stakers are getting 2% of that. So that's a really interesting value prop. The idea that you can own this token and it can generate ETH as a cash flow, right? So if this platform can get the liquidity, if it can get the users to use it, it could be like an incredible opportunity to kind of get on the ground floor of, because you can just imagine having a little $5,000 bag you pack today, and then this thing does a 100x or something, and then you end up with a a $500,000 bag, and then that $500,000 bag is making you like $100K a year in ETH on top of it.
Yeah,
What
make
would
it
you
happen,
pay for
Steven.
that? Like, what would you pay for that? Probably a lot.
Make it happen, Steven.
Can I like just build upon what we've been talking about and like sprinkle a little bit of maybe fun, maybe reality on the situation? It's like when we're talking about a valuation, we're talking about like the intrinsic value of this protocol, but like what we're really talking about, what we care about is the token price, and like, are we going to make money on this if we like buy this today? And I think those are two different things. And like even looking at Sushi Token, which is kind of like the proxy for this, like even going back to something that Steven talked about last episode, I think he said, first of all, that dexes, we're agnostic to which dex we use. So we'll probably use LooksRare if we get a token, which was like why people ported over to Sushi. But if you look at like how Sushi Token has performed, it pumped early and now it's down 80% from its highs. So like, I don't think that it's necessarily a guarantee that LooksRare over the long term, the token's going to be a good investment. Like the market cap can continue rising.
Is it the same as any other DEX when it comes to NFTs? Because I think the user experience is a huge part of that. I think the community is a huge part of that. I think that LooksRare, for me, the smartest thing they did was timing. So they let somebody go first. They did it better than them. But the best part about their timing is that when Coinbase comes out, and they're going to do a great job without any of the user focus or rewards whatsoever. There might be a very small version of what LooksRare has created. If anything, it'll be more like an OpenSea with a better UI and more reliable experience on the site in general. When those users that enter the NFT market, which if I'm not mistaken is at least 3 million people, right, come onto the market, have their first experience, and start to go down the crypto NFT rabbit hole and realize that they can have maybe not necessarily a better UX, UI experience, but an experience as a user that is more rewarding. I think that LooksRare is properly positioned to go take all those people to move from centralized to decentralized that are going down the rabbit hole and want to have more fun with this whole thing. That to me is like the best part of what they've done.
Yeah.
Yeah.
I mean,
so
Eric,
what you said, like I think you and Eric said two things I think that are important and need to kind of be tied together, because you talked about the importance of building out a user experience with these marketplaces, and I think that's really, really important. And I think that's important to an extent that it's not important when we talk about a DEX like Sushi, right?
Agree.
So we can learn some things from Sushi for sure, but like also it's not an apples to apples comparison. And I think another super important thing that you have to consider when you're talking about trying to draw analogies between Sushi or any DEX and this, right? The problem that these DEXs ran into, like Sushi, was that the liquidity in the DEX was very like hypermobile and didn't care about moving. Right? People parked capital there to earn fees and they left. So you have to keep emitting tokens, right? Which is a drag on your token price in order to get the liquidity there. And it's like a very difficult model to balance. What's different in NFTs today, right? So with something like Sushi, I could have Ethereum and I can have Bitcoin, right? And I could just park it in a liquidity pool and I can earn passive income on it, right? I'm not trying to sell my Bitcoin. I'm not trying to sell my Ethereum. I'm just trying to hold them and earn interest. With NFTs, like the user is, when they list their NFT, they're trying to sell their NFT. They're not trying to passively park it and earn income on it. So I think that the people who are on the supply side have like a bit of a very different incentive when it comes to talking about like an NFT DEX versus the capital, the liquidity when we're talking about a DEX that has coins, right? So, and because of that, I think that stuff that like Armand's talking about, where it comes to like the UX and these things, is going to have like more importance, and like a good team that develops properly is going to be able to build more of a moat than they may in some of these other areas, Some
small liquidity pool on like something other than Uniswap will still allow me to swap my coins right when I want to in a smaller size. But like on LooksRare, I might not be able to sell my NFT at all. Like there might not be liquidity there.
I think the opposite is true though, right? To an extent, because when you're selling an NFT, you're always just trying to sell like one NFT. It's like a single unit. So when you have a DEX and you don't have a lot of liquidity, you run into a slippage problem, right? If you're trying to buy $10,000 of a coin, but there's only $100,000 in the pool, when you try to make that $10,000 purchase, you may lose like 5 or 10% or whatever the math works out to, right, of that transaction. And that's like a terrible experience for the user. So no matter how small the NFT DEX is, as long as there is the NFT that they want on there, they're not going to experience like slippage per se. There may be other problems where if they're just trying to like browse a collection and find something they like, there's not a lot of inventory, and maybe that's a bad user experience, but they're not going to like necessarily lose funds that way. And I also think it's interesting too, like the thing about when we had the DEXs, right, we ultimately built these other layers on top of them, the aggregators. And a lot of people, like I know I personally mostly use aggregators because like I can go to this one app that filters like liquidity from multiple DEXs at once and just gets me the
What's
best
your
execution.
favorite, by the way, Steven, like they use today?
It depends where I am. I like to use Matcha on mainnet, but I use an app called Firebird a lot on Phantom and Avalanche. It's been especially useful on Phantom because Phantom for a while had super fragmented liquidity. It was so hard to make a trade. You'd have to make a trade on like 5 different DEXs, and it was awful. And then on Polygon, I've used Slingshot for a while, which I think is pretty. You don't just use MetaMask swap?
We should all be doing that. We should all be doing
that. By the way, there's no way
missing an airdrop.
Yeah, there's no way they can incentivize that. I mean, you're just going to have a bunch of, kind of novice users getting extra airdrops because they were using this exchange feature that just charged them more for no reason. But anyway, I don't think.
Maybe it's not do a full MetaMask pivot just yet.
Yeah, no, we shouldn't go in there. Well, to your point though.
Yeah, go back, Nick.
I was going to say, like, assume they can get the liquidity. It does seem like a positive expected value for a seller to sell because you have 0.5% less fees, plus you get free tokens, essentially a share from your trading rewards. And then from a buyer perspective, I think it's equally as a positive EV because you get also tokens or your share of the platform fees for purchasing. So if they can figure out the liquidity issue from a user perspective, if they feel confident that they can sell the NFT that they're listing, and if they feel confident that they can find what they want to buy, right now the economics make sense to do it. So it'll be interesting to see how this transpires over the next.
I would guess the game theory sort of plays out where if the fees are 2%, right? Mm-hmm. If the volume is too low, then people have an incentive to wash trade because there's free money, right? But then if the volume gets really, really high, wash trading isn't as profitable because there's a chance that you could pay 2% in fees, but then only earn 1% in tokens, right? So I think the equilibrium will probably play out where once this calms down, you're probably earning like 2 to 4%, I think, in rewards for everything you sell and everything you buy. And that's kind of huge, right? Like if that ends up being like 3 or 4%, then when you talk about the 0.5% you're saving in fees from Uniswap, from OpenSea, plus the trading rewards on top, like somebody who's selling something on LooksRare, maybe saving like 4.5%, like call it like 2.5 to 4.5%. And that's just an enormous deal, right? Because some of these NFTs trade for $50,000, $100,000. 4.5% is so much, right? And then the user, right, is getting like a free 1, 2, 3% back when they buy. And that's kind of nice as well. And if you can deliver them also like a good UX experience on top of that, which remains to be seen, but it could work. It could work. And if it does, like the market that's there to capture could be nutty, right? Like I don't think it's out of the question that OpenSea could be like a $300-400 billion company in a couple of years, just in terms of like how much growth there is in the NFT space and where they are right now. Mm-hmm. So if there is a decentralized competitor that can grab some chunk of that market share, I mean, that'd be a pretty steep valuation.
So you're buying Looks. Like, okay, how are you guys personally playing this right now? Like, I've been wanting to catch up on this in general. Like, how did you play your airdrop? And some of you, I believe, are adding to the bag. So, like, I think who said right before this that they just bought some? Oh, Steven, right? No, one of you did. Mm-hmm. So, how are you guys playing this? And how are you? Yeah. So, tell me. Like, what was? So, did you have like a?
I mean, I kept my airdrop because when I got it, I just sort of looked at the potential upside and just the need for it in the market. And obviously on day one, you're not sure about the execution. That's always going to be a question. But I thought the risk reward was really, really good. But I wasn't like happy with the size of my airdrop bag. I wanted more. So every time it dipped, I accumulated a little bit more, and I plan to be getting a pretty decent bag of this. I think it's a tricky thing right now for somebody to navigate, right? Because if you're not in the know with how the rewards play out and everything, like you could very easily just accidentally buy at like a really bad time. Like we were talking earlier how the rewards are distributed at like 6 p.m. every day, right? So I kind of figured today that like when those rewards got released, there would be a big dump because there's all these people gaming the airdrop system. And the people who are gaming the airdrop system are probably not like long-term believers of the platform, right? They probably have also risked like maybe millions of dollars of ETH wash trading, in order to get these tokens. So they're going to be highly motivated to just dump them as quickly as possible, right? So if you rolled around at 5:58 p.m. and we're like, oh, I'm going to buy some LooksRare because I like this project, and you bought it, like 3 minutes later, you got dumped on like 40%. You lost so much money. In
these early days,
probably like,
that's super true.
What the heck happened, right?
Yeah.
So there's that. And then we also have to be aware that the total supply is like 1 billion tokens. And I think only 10% of that or so has been issued, right? Mm-hmm. So 90% of the supply is going to come onto the market over the next 2 years. That's going to be a lot of tokens coming on, a lot of opportunities for people to sell and dilute you. So it's very possible that this doesn't go anywhere for a while because of that. It's something you have to be aware of when you buy a project, like how much of the supply is actually already outstanding versus like how much is going to come on and dilute me later. Now, I'm hopeful with something like this because the staking is so lucrative, right? Like I just checked the rewards before we started recording. It was 1,200% APR, not even APY for staking, right? So if that happens, you could end up with a lot of the supply locked up, and then you don't have to worry about getting dumped on as much. And it's less of a worry as well when the project is like real and people see real future value. They don't want to sell it, and you're not just playing some game. So it is a lot to navigate for somebody, but I would recommend like probably buying after 6 p.m. I guess in the coming days is probably going to be
there's your alfalfa right there.
Alfalfa, baby.
Like dumping. You got to assume that the market's going to start front running that, and maybe it just kind of goes away pretty quickly. So it might not be something to worry about. But yeah, I think just dollar cost average in. Just if you like the project, buy a little bit on dips, stake it. You're going to get like a lot of rewards if this keeps up over the next, 2 or 3 months with all the wash trading, because those are tokens just put in your hands.
What's up with that? Because they have documentation on their site like, hey, don't worry about wash trading. The fees that are worked in will make it practically impossible for people to want to do that. What's the explanation there? Like it looks like platform fee 2%, royalty 5 to 10%. If multiple individuals try to wash trade on the same day, they'll share the daily trading rewards with themselves and likely be at a loss when the cost of wash trading is factored in. So obviously, that's
Jason
not
created
true.
that calculator in the thread that showed you that, depending on the volume and the price, it's not a huge margin. It's thin margins to negative EV to wash trade. So he was quick to pop that in there and show that it may not be worth it.
So the folks who are wash trading are probably doing it at a loss, and we as stakers, we welcome that because we're earning wrapped ETH off of their loss. Like the
I don't think
APR
they're doing it at a loss.
Talking about the thousands APR, the 1,000 APR.
They're assuming
400% of that is in ETH.
Yeah.
600%.
I mean, you would like the market would have to be highly irrational, right, for people to be just blowing trading fees every day to accumulate like at a loss wash trading. Yeah, that's why I was saying I think that there's going to be an equilibrium, right, where you're willing to accept like a free 2% a day with like crazy volatility, right? But like for that free 2% edge, you're going to take it because maybe if you wash trade 1 or 2% for 2 months straight every single day at like a 1% edge, maybe you come out ahead, and that's worth the risk.
Just amazed what people have time for. I don't think it's a given
that people are going to lose money.
Good point.
It's probably just going to be a like most other things in the market. It's just going to be like, are you willing to accept the risk? If you want to accept the risk, then you can kind of get this greater, quote unquote, amount of free money. But it's not super free, and I think some of these. Right now, it's just people who are probably just screwing around, but I imagine somebody will build a bot and do some analytics and pretty quickly decide whether or not it's good to wash trade. And I think a lot of volume will come in at like the very end of the day when you can kind of like have an idea of like if it's profitable or not. So it's going to be its own little meta game within this. But I think it'll overall be good for token holders because it's going to give them a chance to kind of like accumulate cheaper, I think, if they want to, because there's going to be all these people probably irrationally dumping because they have so much. But also that wash trading is going to generate like immense amounts of fees, which is going to generate a lot of interest, which may generate capital. And you could even see like a really irrational short-term mega pump in the price. Like we saw this in DYDX. The token launched at like $8 or $9 or something, and then it traded to $28. Because like everybody's like, oh my god, the volume's crazy. This exchange is gonna like replace Uniswap. It's revolutionary. But all that volume ended up being just like people wash trading for the token rewards. And then once the market sort of figured that out, that retraced from like $28 back down to like $5 or $6 or something. So we could see a similar thing here.
I still need an answer to my question, you guys. How are you guys playing this? None of you guys are answering the question.
I told you.
That was a hell of an
dollar cost average, buy after 6 p.m. when it tanks and stake.
Okay. No. What did I want to know what you are doing, not what you recommend.
So Steven bought the actual 6 p.m. dip. It went down to 2.65, and then like within 20 minutes, it was back up at 350. I bought some on the day of the launch when it was dumping. I bought at $2, and I'll probably look to continue accumulating. I like this.
Nice. So you staked the whole thing.
You know what's worth mentioning about this for people? The staking contract is auto compounding, which is beautiful because you can put like you stake it and you can just go away. You don't have to harvest, pay gas, and then restake to kind of like. And it just kills your yield. So you can just throw like $1,000 in there or whatever, and then it'll just automatically like reinvest it for you. So if you're kind of like a firm believer in the long-term project, or you just want to participate in that upside, just buy what you want to have exposure to now, maybe like half of it, and then you're probably going to get some dips. When there's dips, buy more, just keep staking it. And I think in the long run, if it succeeds, like you're going to have a gigantic bag because of all of the rewards, and you'll probably be pretty happy.
Earning 400% in 400% APR in ETH is so awesome. Even if you don't even care about looks, like that's awesome.
Right.
Yeah, you can always swap from looks to ETH as well. Like, might as well keep building at this APR. Yeah. So Nick,
I'm curious how long that APR persists. It's like this
Well,
like interesting.
Yeah, it went
It's going to
down
equal
to
out.
one
I mean,
point
people are going to dump. Yeah.
600.
Well, it's
500%.
different now because there's an ETH APR. So when there was a 600% APR, but it was paid out in the token price, right? That APR is tricky because you're getting a ton of yield, but you're getting the yield in the same token. So if the token price goes down, then that yield gets destroyed, and it's not really worth staking it just for the yield. Like you can get killed that very easily. But when you get paid in a totally different token, ETH, well, that's like a game changer now, because now you have this like other assets to model your cash flows against, and the price of ETH doesn't care what the price of Looks is. So the price of Looks has to be tied to the price of ETH to some degree, right? Like this thing can't be printing 600%. It can't be printing 2% a day in ETH interest and then stay at like $2. Like it would have to pump, right? But like as soon as the wash trading died down, right? If there is no long-term volume that comes in, well, that 600% ETH APR will very quickly turn into a 5% ETH APR. And then if the price of the token was totally based on that ETH APR, then the price of the token is going to like immediately tank again, which is why like I think you could see some crazy swings in the price like in the short run just due to the tokenomics incentives and how they're going to kind of shift over time and the effect that has on staking, So there's a lot of ways to play the game if you want to get like really in the weeds with it, but most people might not want to deal with the hassle. They probably should just buy, stake, and just walk away.
No one's thinking. 99.9% of people are not. I'm actually interested in who are the people that are wash trading like right now. Like I just want to meet one of these people. It's just so interesting to me to like find a 1%, 2% edge and spend so much time on that. But hey, I mean, it's helping the platform, right? It's creating like volume that everyone's talking about, right. and ultimately,
it's interesting debate if it helps the platform and to what degree, and it's probably both,
Yeah.
I mean, exactly. I didn't get bullish on it until I saw the APR break down in ETH rewards, and it's probably because of that wash trading to realize that, whoa, you can get, if there is enough volume on this thing, you can get a significant return paid in ETH on this. So, when it first came out, I got it spread out across a few wallets, and usually when these airdrops happen, there's a little pump and I sell half of it or a portion of it. So I sold a portion of it back to ETH. And then the other part I actually can't claim because my Trezor hardware wallet can't sign the transaction for some reason. So it's just sitting there unstaked.
Why don't you do Trezor. Why don't you just use MetaMask for something like that?
Well, it is MetaMask, or is it my hardware
through
wallet
your
through MetaMask?
Wallet? Why not just go directly to
I mean, it's tied to that wallet though, which is on my hardware wallet. And I'm not about to
for the airdrop.
Yeah, I'm not.
Well, you could.
I know I could pull my seed phrase and instate it in a new
you could just put your
MetaMask.
seed phrase in a Ledger wallet, right? Like if you have a Ledger wallet lying around, you can put your Trezor seed phrase in. Because I was the same thing. I didn't want to enter my seed phrase into my computer just on a new MetaMask just to do it. But I have a bunch of Ledgers lying around in my closet for normal things. I might
have one in this office somewhere.
Yeah, so you just pop your Trezor seed phrase into the Ledger. That's not like a device specific thing, and then voila, your whole wallet, all your wallets are on your Ledger, and then your Ledger can actually sign the transaction.
Pop it in LooksRare Discord help. That seed phrase in there.
Can anyone help? Here's my phrase.
No, that is
See
a
if you
joke.
can remote into my wallet and fix
that's a joke. Don't do that. Please. I can't believe I have to say this, but please don't do that.
Yeah. Oh my god. Well, because this shit happens. It literally happens to people.
If there are any Bored Ape holders listening out there, please don't.
These guys get ripped.
Did you guys see that person that accidentally sold their Bored Ape for like point something the other day? Did you guys see that?
I did not.
Oh my god. Poor
this is
soul.
a related
you just
topic.
Missed the decimal plates.
Just sold it for like pennies, man.
So this is a very related topic because some of these Bored Ape holders are giving away their seed phrase, getting conned, whatever. They say they're getting hacked, and the Bored Ape sells or gets stolen away from their wallet. That person who steals it sells it on OpenSea to someone who thinks they're just purchasing a Bored Ape at a pretty darn good rate.
Yeah.
And the original Bored Ape holders are going to OpenSea for customer service, and OpenSea is going in and freezing those NFTs. So this is the trade-off of
what?
And freezing those, right? Not making them tradable.
Oh, no way.
So in some cases, and this is not just for Bored Apes, but in some cases, the person who stole it and is selling, they're not able to sell, which, you know, you may argue is like a good case of this. But on the other side, people who are buying from people who stole it are having it taken away. And so, you know, there are issues here with like a centralized.
Wait, this is very controversial. This is very like what happened to code.
This is OpenSea intervening. They're like freezing some NFTs, and I think this will be interesting. Let's say LooksRare does get some volume, and something happens. Someone mistypes, gets their wallet hacked, and they go to look up where they're going to find customer support, and there's not going to be any because it's decentralized. So, you know, a lot of people like the idea of a decentralized platform until they, you know, need.
I don't know,
customer support, and there is none. So we'll see.
I mean,
you guys don't find that
this
controversial?
has already been a thing, right?
Hey,
like somebody's bought some mutants today, or an ape, and they went to sell it on they bought the ape on LooksRare, and then when they went to sell it on OpenSea, they discovered that it was like red flagged and they couldn't list it.
Oh, brutal.
Yeah. That's terrible.
Like OpenSea shouldn't be playing this. I mean, like, first of all, if you're the owner of OpenSea, like, how are you going to scale that process? Like, how do you scale that process across all these transactions? I mean, they probably have some, you know, something detecting things that are sold well below the floor price, but I mean, it just doesn't seem like a real scalable thing to try to intervene on.
I don't like it. I'm surprised you guys aren't like freaking out about it. I think that's super controversial. That's like the antithesis. I can't say antithesis right now. The antithesis of like crypto and like decentralization. Like I don't.
OpenSea isn't crypto.
I know,
right?
but it is just like any other exchange. Like it's one
Web
of these centralized
2.5
exchanges. Yeah, it's Web. It's
I
Web
think
2.5.
I think OpenSea is actually in dangerous waters here, right? Because I think they're in danger of like getting stuck in the middle of a market. Because we're going to have, if LooksRare is successful, right, we're going to have the purely decentralized marketplace. But then if Coinbase is able to execute, right, then they're going to have like a super user-friendly centralized marketplace. And then what's OpenSea going to be? This like half decentralized thing that's not really decentralized, and then like half user-friendly thing that has like shitty support and doesn't have like good UX. Like,
well, you're gonna share a tier for OpenSea
strategy to just plop yourself right in the middle of the market and just do everything kind of badly. You know, that could be. I would worry about that if I were them, for sure.
I mean,
we're gonna run into the same thing with Coinbase, and these users that are on the waiting list are expecting customer support. They're there because they're used to Web 2 experience. They're going to buy or sell their first NFTs as a result of this launch. And when shit goes wrong, they're definitely going to expect a level of customer support. And I think that's like net bad. I don't like it because I think that just like I'm all for a better front end experience as a user. And I'm all for just simplifying this entire process to onboard more people into the space. I think that's all good. But I think there has to be a very clear line. And it's like a principled line about what this whole industry even is supposed to be. I don't know. The whole like customer support, it's like it just moves people too far away from like owning your keys and having control of your assets and being the custodian yourself. Like that is the purpose of all of this. Maybe not to everybody, but to me it is. That's what makes it different than traditional finance. That we were supposed to get rid of the middleman. Like that was the point. I don't know. This frustrates me. I don't like it.
I mean, speaking of traditional finance, I mean, just put a thought in my head about, can we recognize that how much just pure NFT volume is going to happen this month when every other asset class is just getting murdered? So, you know, August 2021 was a peak for NFT volume, specifically on OpenSea. And we're already on pace. OpenSea has already done 2/3 of the volume that they did at their highest month, and it's only 10 days in the month. So basically they're on pace to double the total volume, which is going to be a massive record-breaking volume month. Meanwhile, we have interest rates going up, the 10-year up to local highs, the market getting dumped on, just general crypto market also getting dumped on. But for some reason, here's this little pocket of JPEGs just getting sent to the moon. All the prices are going up, but volume's going up as well. I find that interesting that's happening, and I don't know necessarily.
Good point. Yeah,
it's kind of
it just won't die. I've been waiting for my liquid JPEGs to die for like 6 months, and they just keep going higher. It's like the only thing in my portfolio performing.
Yeah, we all thought it was
they're counter-cyclical, right?
Yeah.
Or they kind of seem like actually counter-cyclical at this point. Like we had a bear in the spring when ETH mooned, and then we had a mega bull in the summer after ETH crashed, and now ETH's crashing again, and we're in an NFT bull again. Is it coincidence, or are they just maybe like high ETH is just bad for NFTs, and once ETH crashes, and people have money to play around with.
I think they're just independent of each other, but yeah, maybe.
I think they're independent too, but I can see why.
I think they're inversely correlated.
Yeah.
Okay. I don't know if they're inversely correlated. I think that maybe we're just in such a nascent period of a growing industry that, like, no matter what happens, when you see this much growth, it kind of washes out the corollary causes and any seasonality or anything like that, because it's growing so fast. But I mean, you do bring a good point about those kind of correlations and timings of the market. It does seem that the NFTs do particularly well when ETH kind of cools down, whether it rises and calms down, or it goes down and calms down. Maybe it is easier for people to kind of make their back of the napkin calculations of what their US dollar wealth is and determined in illiquid JPEGs. But yeah, for some reason, it's kind of funny. It's kind of hilarious.
Well, I think people want to play
watch it happen.
A game. They want to keep the game going. They want to keep the bull run going. If they see this sell-off with ETH, they want to play the game somewhere. And I do think there is definitely a correlation between, like, okay, I have some more to play with, or like this isn't interesting right now and it's very stagnant, and I want to sort of like shock myself a little bit. I think people have gotten addicted in general to the space, and they need to create the volatility if it's not there even at times. Like, I'm noticing that even on a collection level with some of these like NFT collections. It's like it's nuts what some of these do. I think people just flock to that. By the way, did you guys see this Gary V Immutable X Layer 2 Ethereum NFT marketplace launch? Like, did you guys on what is that marketplace called? Token shit. What is that called?
He launched the book thing.
Book games. Book games. NFT. But what is that marketplace called for Immutable X? It's slipping from my mind right now. But anyway, it's massive. Like, the whole thing has just like a token trove. There we go. Token Trove is the marketplace that runs on a layer 2 Immutable X, and like he basically single-handedly like took this thing to the moon. It's done more volume than it has in like one day. But it's really interesting that he selected to do this on layer 2. Like, the guy is just so fascinating in so many ways. Like, I know that he views himself at this point as like a pioneer. And I know that he's self-aware enough to know that his decisions are incredibly important for what he's doing for this space. And thank God he thinks in a very optimistic way about everything, especially technology, because he understands, I think, his role to shape this. And in many ways, like, if he can get people onto layer 2 with NFTs, I think he just opens up the floodgates to like this whole thing becoming more and more competitive. We're going to see so many LooksRares, not just on layer 1 Ethereum, but on all these other L2 chains with, like, it's going to be incredible. Avalanche as well, like, has their own NFT marketplace, right? So it's big what he's doing.
Can I just go back to Steven's point, and then we can just move on from here? But I just think that when we're talking about NFTs being counter-cyclical or something, I think it's just too early to tell. This is my take. I mean, take it for what it is. It's too early to tell. We saw through LooksRare how many users there were that transacted 3 ETH or more. It was 185,000 users. That's a very small number. like when Binance has 4.5 million people on the Binance chain. So it's like, it's so early that I think it's just like, for me, it's too early to tell whether there's correlation or not. I think it's just still onboarding a bunch of crypto heads that like weren't using NFTs because they're much newer. So, take it for what it is.
Right.
We could also be overcomplicating it. It could just be that when people want to use NFTs and they have to pay for stuff in ETH, when ETH is really high and gas is really high, they're less likely to buy NFTs because it's more expensive.
Yeah,
True.
That's what
Could
I
be.
thought you originally. That's what
Could
I
be.
thought you were saying is a correlation. Yeah.
But
It'll be
you're
interesting
right.
to
It
see.
could be sample size. We have to be open to that.
Clearly they're fun. Like we all use them, and like they're fun and they're kind of addictive, like gambling. So if like people were already doing that in crypto, but like hadn't come over to NFTs, there are probably more people that are coming on board.
Well,
It'll be
let's
interesting
talk about the layer. Let's talk about the layer twos a little bit too, right? Because speaking of like onboarding people, right? There's this. I talk to a lot of people in the NFT space, and a lot of them say, "Oh, nobody wants to launch products on layer twos because nobody uses layer twos, right?" And I kind of like don't think that's right, because like I already thought or already think it's already such an ask for a regular person who wants to buy NFTs to just use Ethereum, right? Like think of the hoops they have to jump through
Nightmare.
to buy something. Is it that much more difficult for them to get on Immutable X? Probably not. I think the thing is they just need something that they want to buy.
It literally looks the exact same to a new user. I think you're right.
It's the same process,
So
the same
I think
getting
the problem
started
is we just
guide.
haven't had good layer two stuff. I mean, there has been good stuff lately, right? We've seen a lot happening with Treasure and the Magic token, that ecosystem. Small Brains really took off, and people wanted to buy that project and use it, and that drove tons of value. That's an Arbitrum base. That's layer two. And now Gary Vee's launching something on Immutable X, layer two, and people are buying it and people are into it, and they don't necessarily care that it's layer two. They just it's a thing they like that they think's cool, so they're gonna do it. There will be adoption.
They follow the creator. It's not about the platform. Mm-hmm. It's not about layer one or layer two. It's like when you launch a project, you can launch it wherever you want. Ultimately, your community will be loyal and follow you. And if you have a good reason, like, hey, I'm going to airdrop you your NFT and you won't have to pay any gas. Okay, thanks, Gary. Like, that's awesome. And then, by the way, like, what is gas on the actual transactions on something like that on that platform? Nothing. Like
Immutable X is
zero.
They cover the fees.
Well, there you go, man. So it's like you're helping your users out. They're going to follow you anyway. And you have to lay out a step-by-step guide for them anyway. And most people's first experience with anything is through you. So it's like, unless they're already an experienced NFT user of some kind or crypto investor, like, they're not going to care. It's all the same. So I think this is the key decision, is like how this plays out. So the tech that's going to be built out on layer two, especially around these NFT marketplaces, like, if the tech's good enough and the user experience is good enough, I think the creators will decide where they want to go and what's best for their community. And then the whole thing will just kind of expand organically, where there's different ecosystems on different chains, which is super exciting. I think it's a really good bullish case for all of this.
Definitely a bullish case for those platforms or whatever protocols that can like bridge you across all of them. Like if it is a multi-chain future, you're gonna have to have secure bridges between all of it.
Yeah, that's the part that
I still think probably in the future a user just fires up an iPhone app, right? And they just buy NFTs they like, and then they don't know or care if they're using Arbitrum or Immutable or Mainnet or Avalanche, and they're just into because people ultimately are in, like you said, they care about the creators, they care about the art, they care about the community, they care about all these non-tech stuff, right? It's a very small subset of the NFT community that cares about like the tech, right? Like people
Yeah.
who buy punks, right, or the mainnet thing matters to them. Punks wouldn't be the same if they launched on Polkadot, right? But for the vast majority of people who come into NFTs for the next few years, yeah, they're not going to care. They're in it for the art.
Yeah, if you told me
Or
like
they're in it to make money.
an immutable X NFT is less premium, I wouldn't be like what the fuck do I care? Like I wanted that because I like that artist. Like I wanted it. Each collection becomes its own ecosystem ultimately. And then all this stuff is just the background technology to how it's delivered and what that collection marketplace looks like. But ultimately it's just like the pipes, you know, and each collection is its own little world. Anyway, Nick, I know you wanted to talk about Fed rates, unless you have more to add to this NFT discussion. But I know you've had that on your mind.
Let's jump into it just a little bit, just because we had a fairly large crypto correction, and I think if you're not paying attention to the broader markets, you might think it has a crypto cause to it, like I don't know, China canceling Bitcoin again, or some kind of miners going down, or some kind of regulation, or that just everyone's turning bearish. But I don't think that's the case. So crypto was pretty excited when institutions come into market, right? They're going to bring a whole lot of money in and buy our bags, and everything's going to go up. But that's like a two-sided coin, right? Institutions buy, but they also sell, and they typically buy and sell programmatically, right? The significant majority of trades by institutions are made by computers. I think something like probably like 90% of them, and they kind of trade, on some major key metrics. And the 10-year treasury is one of the most important metrics to trade on. So, when interest rates go up, it affects a lot of things. But essentially what happened is institutions programmatically de-risked across all asset classes. And so, when crypto is just characterized as a risky asset class by institutions, well, they sell off. And so that's what we saw. We saw not only the stock market sell off, but we saw the crypto market sell off. It had nothing to do with anything, crypto fundamentals. So I think that's one part to talk about and why we should talk about it. Now, broadly speaking about, interest rates, it has a huge impact on everyone. The 10-year treasury is kind of the risk-free rate of return that you get as an investor and as a potential business builder. The 10-year treasury affects mortgage rates, car loans, what else? Credit card rates, student loans, even. And as a capital allocator, it's what helps you define, what your rate of return will be in a project, because it helps you define how you discount your future cash flows in any given project. So when your risk-free rate of return increases, the rate of return you need from entering into a risky project, like building a new home or starting a new business, or for a bank lending out money, that bar raises up. And so you might be wondering why your Facebook and stock and Google stock crashed. It's because, well, going on those ventures, those future cash flows are now discounted at a higher rate. So in general, it affects a lot of things. I don't think people understand how big of a reverberation, increase in rates are, and why the Fed has so much control over our economy. And, we've kind of talked about this, and specifically Eric and Steven in previous podcasts, and Eric posted about it recently, that all asset classes are approaching a correlation of 1, because and that's really important, because a lot of that trades off of how interest rates move. So we're seeing that now in the crypto asset class. I think it's important to bring apart. But curious what your guys' thoughts are in the general market. The 10-year treasury moved up from like 1.4-ish, I think, to 1.75. And it looks like, the market's kind of pricing in 3 to 4 interest rate hikes this year. So we'll see how this kind of affects the market. But I think it's something important to talk about, and bring an awareness to like the impact that Jerome Powell and the Fed and the 10-year treasury has on your portfolio, even if you have nothing to do with lending markets or the stock market.
I'd like to go. I'd like to go.
Go.
So I thought about like the simplest like ELI 5, explain like I'm 5 way to do this. And I think this is the simplest way to make it like a seesaw. So I'm going to put my arm up like this is shit. How do you see it? It's like a seesaw. It's a seesaw. So on one end of the seesaw, you have valuation, and on the other end of the seesaw, you have yields. And these things try to like balance out over time, but the Fed has been putting their thumb down on the yield side, causing the valuations to go higher. And this is true in every asset class. This is real estate, stocks, crypto, et cetera. And what most recently happened is what I'm seeing is that the Fed signaled that they're going to raise the rate side, and people are front running the trade thinking that valuations are going to go lower. So like in growth stocks, like in my line of work, like growth stocks like Square are down 50, 60%. Like good growth businesses are down 60% from their highs. Crypto's down, Bitcoin's down 40%, ETH down 35%. Huge pullbacks. And that's people front running this move of the seesaw. But I think what we saw today, Powell like kind of reiterated his comments saying that like, it's going to be a low rate environment, even if they do try to like take their thumb off the scale. Maybe it's like a better example is like they didn't have their thumb on the scale before. They were standing on the scale with weights in their hands, like making it so that like rates were zero. What they're going to do, they're not going to like jump off that side of the scale. They're just going to like start taking the weights out of their hands. They're still going to be standing on it. They're like at some point, like it's going to start to teeter, but it's not like we're going like this. It's not a flip. So I think what we saw today was a huge reversal. And I think like what that reversal is like guys like Steven who were front running the trade, shorting the market. That's them unwinding their short. They're like hugely profitable. Like these guys made 60% on the way down, shorting, and now they're like unwinding their short. So you see a little bit of a bounce. That doesn't necessarily mean that it's like demand back into growth stocks necessarily. It's just kind of like a bounce off of like people front running that trade.
Right. It's interesting to point out that seesaw you mentioned is kind of like a first principle in capital markets, that it's done programmatically. That was done at large scales on large amounts of capital, and so it almost is kind of detached. Now it detaches the stock price away from the fundamentals of projects, right? Like Facebook and Google are still printing cash. Bitcoin and Ethereum still have their fundamentals that are good. Rental real estate still has the fundamentals there. The general real estate market, but now they're a little detached. So the market's got to figure out, where it thinks the future value will be. So I don't know. I find it fascinating that it's done programmatically and to try to take a step back and not try to overreact to it. The market's just going to try to find its equilibrium as we see, the cost of capital get a little higher for new ventures, new projects. And if you're looking to buy a home, your interest rates on your mortgage are probably going to, tick up over time if they haven't already. Housing market might cool off, or it might not if it kind of brushes off 3 or 4 rate hikes. That would be even crazier if, 3 or 4 rate hikes later, you're still seeing people going in over asking price. That would be.
Well, to your point earlier, like you were talking about the 10-year rate, people also quote the 30-year. Like really what the Fed controls is the short end of the curve, like the daily, the monthly, like so they can manipulate the short end of the curve. That doesn't necessarily mean that the 10-year is going to go higher. What we'll probably see is like we'll see a flattening of the yield curve because I think the long end is going to stay pretty low. I mean, we're going to be in a low rate environment, and historically speaking, if we go up from 0 to 2% or something, that's still incredibly accommodative. So like, I actually think that's a good environment for growth investments like crypto and, growth stocks, whatever.
I had a question for Steven. I mean, do you think this is the equivalent of a taper tantrum? I mean, we're essentially seeing the first announcement of the Fed saying we're going to taper, QE, we're going to taper, like open market operations of buying assets. Interest rates are going up and the market is reacting. And last time this happened, I forget exactly what year, 2018, maybe. Feel free to correct me, but last time interest rates started to go back up, the market freaked out, and then the Fed kind of reacted. So, do you think this is what we're seeing now, or the Fed kind of just pushed through regardless of market reaction?
So I've looked at this a lot. In the past, from what I can tell, it seems like when you look at this historically, and you can, if you have like some charting software like TradingView, you can plot, say, the price of the S&P, and then you can plot rates alongside of it. And it seems as though, like, when the Fed announces that they're tightening in the past, you can see the rate go up, and it's typically not until the end, and that they've tightened quite a bit, that the market throws its quote unquote tantrum. I think now there's just this like hyper awareness in the market that everything is just hanging on a thread, that the Fed is sort of like dangling. And it's like a scary sign that the market is just completely tanking just at the thought of it, right? And again, not a thought of initially it was just that they were going to end they were going to just end the free money, right? It wasn't even like they were going to necessarily tighten. They were just going to stop spending or pouring however many billions a day into the economy. But the market's really overreacted. Well, I don't know that they overreacted. That could be an argument we could make, but they reacted to Powell sort of like backtracking in a way, and in giving some weird kind of inconsistent guidance, where it went from we're going to taper to we're gonna like really put on the brakes and be like pretty aggressive there, and that definitely freaked the markets out a lot. I kind of think in the short and medium term that this is all probably priced in now. I think if anything, we could surprise to the upside. It seems like there's a decent probability that Omicron sort of forces continued like easy policy, or that Powell backtracks a little bit and isn't quite so hawkish, right? So I definitely see that. If I was like a midterm trader, short-term trader, you'd definitely be playing these levels as for a bounce in crypto. That seems like an easy trade to me. I think the more difficult trade is, okay, Bitcoin bounces to 48 and Ethereum bounces to 36, 37. Well, now what do you do? Right? And if you're a trader, right, that's a difficult question. Your price is moving into some difficult levels to break through. There's a lot of uncertainty of what's going to happen still, and you can very easily do the calculus and come out with a $800 or an $8,000 Ethereum price. It just sort of is what it is there. For like a normal person, I don't know that you have to necessarily change your strategy so much as just be aware of what you're doing and what the risks are. I think most people who are good at trading, I think people think that traders predict what's going to happen and that's how they make money, by predicting stuff. When the truth is, they sort of are just good at evaluating scenarios and managing risk across those scenarios. And they put themselves in situations where even if they're wrong more than half of the time, the amount of money that they make when they're right just far outweighs the money that they lose when they're wrong. So it's not about predicting what's going to happen. It's about managing your risk. It's about being aware of what all the scenarios are and a vague idea of their probabilities, and having a plan for that, right? So for the casual investor who's just been buying tech stonks for the last 3 years, they're probably really confused. Like, why are my tech stonks all down like 50%? What's happening? And they may not understand what Nick and Eric said about how rates impact these valuations. But the adjustment somebody like that has to make is to just reimagine what they think of like stock investing, right? Buying stocks is probably not buying high growth tech forever. You probably want to be buying stuff that does well in like stagflationary environments, companies that cash flow will do better if rates are higher than companies that are growth companies. And these are just sort of general changes you make to your portfolio and general changes you make to your allocation. Not so much as predicting what's going to happen. And then the other big thing I think is that when you are in periods right now of like really high uncertainty, where there is like a relatively high probability scenario that we do see like a gigantic correction even beyond this one, I think an important thing for people to do is to keep some cash on the sidelines, because then when the dip happens, you don't feel helpless and paralyzed, right? You're not like, oh my God, do I need to sell? Part of you is like, oh boy, like
Right.
I could buy. Like you can
Right.
kind of actually see it as an opportunity, and it totally changes your psychology. Like if you're feeling bad when everything's going down, it's generally a sign that you are a little bit overexposed and you may have too much of the wrong stuff. You may be too concentrated in one basket.
It's a good point. Investing is simple. Just own what you want to hold for 10 plus years, hold a little bit of cash, and you're not sweating any of this.
Yeah.
Go ahead, Nick.
I was going to say, I think we talk about a lot about crypto, but I personally don't hold, a good portion of my net worth in crypto. It's actually mostly in like real estate, and I'm loving these like rising interest rates for the apartment complexes we're invested in that have like fixed debt, situations, and they're outperforming, really well in this type of environment. But having all your money in crypto or significant net worth is certainly not advisable unless conviction high plus your edge plus your ability to not freak out during these volatility situations. So yeah, I definitely wouldn't
Hang
recommend
on.
that.
While we were talking about the Fed, I think it like what's important to me is not like what they said today, which is like, okay, so we're going to have these rate rises or whatever. What matters is what they're going to say tomorrow. Tomorrow is when the next inflation print comes out, because the Fed has they call it like a dual mandate. They want to promote full employment, which is like economic growth, and they want to maintain stable prices. Stable prices is inflation. Like if inflation gets too crazy, then they have to raise rates to combat that inflation. Right now, economic growth looks pretty good. Full employment is pretty much achieved. Like unemployment is down to like 3.9% or something. Like very good employment numbers. So it's like it's all about inflation. That number comes out tomorrow. I don't think in my lifetime I've ever anticipated an inflation print as much as I have for tomorrow. And I think we're kind of all, I think so much of our crypto Twitter and, just like people staying home, working through COVID, like have become traders. And like, I don't think that anybody has ever cared about an inflation print as much as we do tomorrow.
Yeah. I think it's just important for people to understand, like when they're operating within, a certain protocol or a certain token, like even like Looks, they're operating within a broader crypto market, which operates within, a broader capital market. And it's just important to understand, you don't have to get in the depths of it, but know that sometimes the broader capital markets can give you a lift, but it also smack you upside the head, regardless of the fundamentals of your individual project or stock that you're looking at.
Amen,
brother. So have you guys been playing around with any allocation in regards to what you guys just mentioned? I mean, Steven, I think that was really insightful what you said. It's like it often creates an opportunity for a person to sit down and go like, oh, I'm not getting the I think the biggest part is conviction, like really wanting and believing in the portfolio you have, even if you don't want to manage it, and if you don't want to constantly like look at rebalancing and reallocating, then you should have some kind of like all-weather portfolio, which I always did up until like basically this past year, where now I've become like a degen. So it is a lot. It's a lot, and it comes with a lot of pressure, and it kind of brings your awareness into a more micro level that some people thoroughly enjoy and others will not enjoy. So I think these are opportunities to take that sort of into account and ask yourself, like, how actively do you really want to be like managing your own portfolio? Because if it's getting stressful right now looking at the stock market, then it's not a good sign. I have one person that's very close to me, I won't call them out, who's like literally texting me every day going like, fuck this market. I'm like, I don't understand. Like, why are you so stressed by this? Like, you clearly like you don't want to play this game. Like, stop playing this game. You
They're
don't
doing the
want
opposite of what Eric just outlined. Probably.
Yeah.
And
Can I talk about I think there's theoretical advice, which is like what Steven said, and there's practical advice, which I think people are looking for. Like the theoretical is, like don't overexpose yourself, have an all-weather portfolio, be prepared for these drawdowns, etc. The practical advice is they were not prepared. Like people are fucking degens. Like the last 3 years has trained you to get out of anything safe because you're getting punished by like the gross shit just zooming. So like people have completely over allocated. It's down 60%. People are asking, what the hell do I do now? And I think the practical advice is
well said.
Is like what Steven said earlier. It's like, I actually think you can bet on a bounce here. We have overcorrected towards like, people were front running the trade too much where like valuations are coming down. And maybe you have your chance soon to take your lesson that you just learned and like go on to the theoretical advice side and like reallocate then once you catch a bounce off of this.
I think if I could start from scratch, I could start from scratch, I guess, but I think if I were starting from scratch and I wanted to be a little more active than the average person, right? I kind of think the Holy Trinity portfolio is like Ethereum, stablecoins, and real estate. Because the way I sort of look at it, it's like if we're in a hyper liquidity environment, Ethereum's going to outperform stocks. They're both going to crash pretty bad. The risk reward profile on stablecoins is just like unlike anything that has ever existed in the history of investing. If you know what to do with them, I mean, even if you don't know what you're doing, you can make like 6 or 7%, which is a lot. It's really hard to make an argument for holding a ton of risky assets if you can just make 6 or 7%, right?
Yeah, and I'm just going to footnote that, Stephen, for you and mention that we're not going to go too deep into stablecoins now, but we went super deep into it in the last episode 6, like the second half of it. So like if you did not listen to episode 6 second half, like go listen to that, because as you're saying, like it's a no-brainer. It's an absolute no-brainer.
Like I would learn how to use stable coins. I would farm them. I would make my 5 to 20% depending on whether we're in a bull or bear market, right? And I would probably honestly keep like 80% of my money in, I maybe shouldn't keep that much in crypto, right? But I would, of the amount I keep in crypto, right? Like if you're not scared of being in crypto, I would keep like, 60 or 70, 80% of my cash like in stablecoin. And I would put like 10% in like Ethereum and like 10% in real estate, or make that 50% cash and 40% real estate and 10% Ethereum. But the general idea is to just have like a large chunk of cash that is farming stable yield, a small chunk of your portfolio that is really exposed to like hyper volatile assets, but with like super, super high upside. And then you have the stable real estate with like the cash flow, right? And then you're going to feel good in like every environment. When the crypto's ripping, your little 10% allocation might quadruple in a year and get you 40% on your overall portfolio, which is pretty cool. Your stable coins, which are half your portfolio, make you 20%, which is pretty cool, right? But then when everything crashes, like your real estate's just going to be still sitting there making cash flow. So who cares, right? But then you're going to have this bucket of money to be like, and then you change your mindset from I'm farming interest to, oh boy, I'm going to go on a shopping spree. And it just means that like no matter what's happening, you always have like a clear head on your shoulders and everything is kind of good for everything that you're doing, right? And I think that like basic heuristic can just be, should I do the not financial?
That is so
this
hard
is just one guy's view on how I like to approach this.
Dude, I don't know. I really like it. I really, really like it, but in an environment where like FOMO is honestly like a way of life and has become cool, really hard to sit back in a bull market when that's happening and just watch your Ethereum grow and not want to participate and not want to buy NFTs and not want to buy the next layer 2 that's about to rip. Really hard to do. I don't know if I could hold myself back to like 10%. I definitely am not.
But here's the thing. If you have 10, even if you go ham and you double your allocation because you can't help yourself and you buy some things to scratch the itch, you're still only at 20.
Right.
No, you guys are both.
Okay. You can live with that.
You guys are both right. I actually think that Steven kind of like unlocked the holy grail there a little bit. And Armand made like the perfect secondary point to it, which is like if you use ETH, stables, and real estate as like the proxy for the new stocks and bonds portfolio allocation, but then like you can take an individual investor's preferences to like massage that and be like, okay, so if you want to take more risk than ETH, you can like either put a higher allocation there, or you can even go out to higher beta stuff like alt L1s using that ETH allocation, taking from stables or real estate. But like I think that
maybe
framework
it's a crypto
makes
allocation.
so much sense.
Yeah,
I think that that's kind of awesome, dude. His range is amazing. I just to give him a little bit of credit. I don't listen, but he's like an awesome range. You can talk to scientists and Tim Dillon.
Incredible, honestly. Nick, you're back.
Yeah, I don't know what happened.
Oh yes, that's nice.
All right, we can pick up with what you were about to say.
Oh, I was just saying that by real estate, I don't think we mean single family homes, your primary residence, or REITs that are pretty easy to buy in the stock market as like public equities. I think generally we're speaking like rental income, either multifamily apartment complexes. There's industrial asset class within real estate. There's also storage units, but in generally speaking, I just want to clarify, we're not thinking, dump that percentage in your single family home and expect it to, print cash, for you. So,
but hold on, I don't know if it needs that disclaimer, because I mean, like, first of all, how many people can just like go into multifamily real estate just for starters? I think like a single family home, like your primary residence, it could qualify. I think so.
It could, but just within the framework Stephen was saying, like having your real estate produce cash flow,
right,
for you.
Yeah, I'm talking about it more in terms of your quote unquote investment portfolio. I think it could be kind of dangerous to think of your residence as like an investment, because certainly.
It's an investment. It's an investment in your comfort and livelihood.
Meanwhile, it is the largest holding for like 90% of America.
Yeah, it is still an incredible holding. Provides wonderful benefits for many people. I don't even have
up and rate go down. That's like the problem, I don't get it. It's like rates have just been going down for 5 decades, so the price of all the homes keeps going up as they print money. But it's like, okay, to what degree is that just like the biggest pyramid scheme of all time? Will it ever unravel? I don't know. Might not be worth worrying about.
It may be fine, but if it is going to start to unravel, it would be right around now as rates, start to bump up a little bit. So we'll see what happens.
I saw the same thing. Like I ran the Trading View numbers with like stock index against the M2 money supply, and you can do the same thing with real estate. It's like those assets going higher is largely just a function of dollar debasement. So I think like real estate number will go up just because the value of the dollar is going to go down. So like,
does real estate go up versus M2, or is it like stocks where like the stock market is actually not even up in supply term?
Good point. Yeah, the stock market's like flat on a real basis. Yeah, it's only up in dollars.
Oh my God.
But, who the fuck wants dollars?
Oh my God. So one, like, I don't even know how to encapsulate this, but like, I honestly expected the beginning of the year to be a little bit more, not like volatile, but yeah, maybe it is like a sense of like just more action packed. It feels like a kind of dull start to the year. Like, I don't know if anyone else.
Really? I feel like I've been in like
60% in growth equity,
of World War II,
40% in crypto.
Like every other day.
I don't know. I mean, I guess that's significant, but like I expected it to go the other way. But I guess Mr. Doom 22 called it which we
June
should
22.
actually
Called
footnote
it
that
like
as well.
January 1, 22.
Yeah.
We should post the screenshot of Stephen Moon like just went short ETH some massive amount.
We have the receipts.
And
We have the
timestamp
receipts.
Yeah.
That was great.
No,
Just
it
wish
was a
I
good.
followed him with all I wish.
Definitely made the last week a lot psychologically easier. I'll tell you that.
Yeah,
Stuff
good
like
for
it.
you.
Have you flipped that back long?
Oh yeah, have you covered?
Yeah, I flipped. I went from net short to very long today.
Welcome back.
Welcome back.
Thank you. I'm not thinking I'll stay that way for a while. I think a bounce is probably a pretty easy play from here, and then I think it gets really dicey. I see good arguments for both camps. I think if you're like an active trader and you're in those situations, it's sometimes good to just take a bunch of money off the table and go flat and farm stables and just wait to buy higher when it's safer, or wait to buy blood. I think that's perfectly fine if you are like somebody who's active. But if you're just like a long-term investor, none of this really matters. Like these prices for Bitcoin are probably really, really good on a 5-10 year time horizon. Like really, really good. It's just like it make you
today.
sick to think of the 3-month volatility.
Same.
I bought Bitcoin today. I bought ETH the other day. Yeah,
Nice.
I'm buying.
Yeah.
This is, I mean, to you guys' point, I wish I did have more cash or stablecoin on the sidelines. Like I just had like an allergic reaction anytime there was a good chunk of money sitting in my checking account, and
That's what I'm saying.
just kind of like any kind of these real estate deals come up, or there's a little dip. But I definitely wish I had more on the sidelines to kind of put to work.
Yeah, you got to have like your little 10-20% cash position, just farming basic stables at like 6 or 7%. That's like really easy to get to, so you don't feel too bad about it.
Yeah.
Right.
All right, boys. I think that should do it.
Wrap it.
Yeah.
Good one.
That was a good one.
Wrap.
Good shit, boys. Anything we need to say other than keep being a good degen?
Oh
Yeah, you guys are getting
go
better.
make fun of us. Go make fun of us in Apple Podcasts. Leave a review. I mean, make it 5 stars, but feel free to make fun of us.
Yeah, that is the price of making fun of us. You have to leave the 5 stars. Then you get to go fully nuke whoever you like. All of us. All right, boys. Good stuff. That's a wrap. Peace.
Peace.